Hey, my name's James Adair. I'm with Neo Home Loans, and this is a video I'm putting together that kind of explains the sequence of events that needs to happen when you get a mortgage. And I put some slides together for you, so let's go to the slides. The mortgage sequence. It starts with a loan application. I've broken it down into 10 steps here. So apply, we verify. So you fill out the loan application, which is like a snapshot of your credit, your income, uh, how much money you've got, where it is, and your debts. Those are the kind of the main features of a loan application. And then we go about verifying that. And my partner, Stephanie, is in charge of that. So I have a whole team here that really helps things usher along quickly and as accurately as possible. So we apply first, we verify second, and then once we've verified everything is as you said it was, you're then pre-approved. And so that's probably the stage you're at now if you're watching this video. So you're pre-approved, and then you go into the market as a home buyer. I'm going to advance the slide here to kind of show you. Oops, hang on, let me back this up a little bit. So we're going to advance the slide to, I also kind of broke out like who's involved in this process. And so, of course, I'm the first person you meet along the way, the loan originator. And so my job is to form the relationship, to educate, explain how the process works, explain your options, bring everything in, pre-solve any barriers to a loan closing. So we don't want you writing offers with any kind of like unclosed loops or unverified documents or like I said, unsolved problems. By the time you're writing an offer, it's my job to make sure that that loan will close and that any problems that might prevent that from happening have been identified and solved, right? And so I'm here to proactively explain and project manage the whole thing from beginning to end with the team. And it's my responsibility to set the standard of client experience as well as to make sure we communicate properly to all stakeholders and all parties, and that we close the loan on time, and that we're proactively keeping everyone in the loop. And so that happens throughout this process. But between stage 3 and 4, you write the offer, it gets accepted, and now two things happen. Now the track kind of splits into two parallel tracks. One's the home buying track with the real estate agent, and then the second track is the mortgage approval track, and they're kind of going simultaneous to each other. But on my track, that's what I'm going to speak to here. We will be submitting the accepted offer and the terms of that and the property address to the underwriter. And we will also order the title report and order an appraisal in most cases. So you're already approved, your credit's good, all the borrowing pieces are already kind of verified and set up. We already did that in the pre-approval process, but now the missing piece is the property. And so we're gathering property information to merge with your credit and borrowing information, and that becomes the basis for the loan file. So we submit to underwriting, and they will sign off on the first pass of that. I almost forgot. The second person you meet along the way, once your offer is accepted, and the person who is really ordering the appraisal and organizing the property information and organizing the file so that an underwriter can just sign off on it right away, is the loan processor. And we have, I think, one of the best processors in the whole business. And I think processing is really probably the most important part of having a good mortgage process, right? It's processing, right? It's the most important governor of the outcome in your overall experience. The loan processor owns the whole process from contract to close. So the loan officer is kind of in charge from pre-approval, explaining, setting the budget, setting the terms, setting the strategy. And then once the offer is accepted, my role as the loan officer starts to really recede, and the role of the processor starts to rise up, and they will take over as the main point of contact for the remainder of your process. And of course, I'm in the background monitoring the market, understanding when it's the best time to lock in the rate, those kinds of things. All the rate and pricing stuff is still falls on my desk and my shoulders. We will order the appraisal, and the appraiser is a third person that comes into this process. You, as a home buyer or mortgage borrower, will probably never meet the appraiser, but the appraiser's job is to be the eyes of the bank, and they verify the existence of the property and they verify the value of that property, right? The home inspection is something that happens on the other track with the realtor, and that inspection report is just for you. The lender does not ever want to see the inspection report. That's sort of like, here's a state of the union of every feature of this house, every system, a report on the, the roof and on the furnace and the electrical panel and the plumbing, and that's the inspection. The appraisal is totally different. It's really just a pure value assessment. So the appraiser goes out there and confirms that what you're paying for this property is appropriate for the market. So understand that the loan is written to one of two numbers, the appraised value of the home or the purchase price. And they're not always the same number. Whichever's the lower number is what we write that loan to. For instance, if you're buying a $500,000 home and it appraises for 510, but you've agreed to buy it for 500, that's great news. Like, hey, this house is probably worth a little bit. You're getting a good deal on this house. You're getting good value. There's evidence that this seller could have maybe sold it for more. For whatever reason, they didn't, and you're able to buy it for 500, and you're putting 20% down, which is $100,000, and you're borrowing 400. And we just move along with this process. The appraisal, just check. The home is now appraised, and that's just, we've checked the box. And the loan that you're getting fits. If you're buying it for 500 and it appraises for 490, now we can only give you a mortgage for 80% of 490. I mean, you could always borrow more and put 82% of 490 down. That triggers mortgage insurance. That creates a strategic decision that would need to be made in the event that happens. But just understand that if it appraises for more than what you're paying for, the plan still will just move along as needed. Most of the time it appraises for exactly what you're paying for it, because the appraiser's job actually isn't to decide what it's worth. It's to verify that what you've agreed to pay for it is appropriate for the market. And usually they just verify that number and we move on. But I just wanted to give you a little information about how the appraisal process works and how it's different from a home inspection. Oh God, here's the loan underwriter. So now that we've ordered the appraisal, we've submitted to the underwriter, they've signed off on everything we've sent and verified our work with your credit and with your credit assets, all that stuff's been signed off by the underwriter. Oftentimes we get that loan approval, conditional loan approval, within the first week or so of your offer being accepted. And then we may have a few additional details to button up at that time. So the file generally gets seen by underwriter 2 times. And then we will repackage the loan based on that report. We'll add in the appraisal report and send it in for final sign off. And then it will go to the docs team, the funder. So once it goes into docs, the underwriter has given us final sign off. It goes to the exit ramp of the entire mortgage process. And we have a whole team that creates the legal paperwork, the final mortgage contract that you sign based on the locked interest rate terms, etc. It goes to the title company where you sign on the dotted line and get the keys to the house. And that's kind of the final part. Once you've signed the document, that closing team will also release the funds into your escrow account, and the title company will take your down payment, the mortgage, and move it over to the seller and clear the funds, pay off the existing loan, attach the new mortgage to your home through the county through a legal process. And you just bought a house. That's the sequence in a nutshell. So there you go. Looking forward to making it all happen for you at some point in the future. Okay, bye-bye.